out to another featured company update here at the Investors Coliseum. Today with me is Senior Vice President of Levante Living Trust, Jim MacDonald. Jim's here today to bring us up to speed with everything that's been happening at Levante Living Trust. And I understand, Jim, thanks so much, of course, for being here. I understand that there's been a lot of recent developments and a lot of really good things happening in terms of reaching that first elusive milestone of 3,000 plus beds. Could you maybe walk our subscribers through a little bit about what's been happening and perhaps a little bit about what's happening over the course of, let's say, the next 4 quarters?
Thanks, Chris. Glad to be here. Levante is really excited about our pace of growth. We're moving ahead of schedule from our business plan, and all is going very, very well, especially in a marketplace that has so many unknowns due to COVID and all the changes that are happening because of that. As it stands right now, our plan has been focused on the idea that we are acquiring and will acquire assisted living facilities that are located in the tier 2 markets, which means they're outside of the major centers in population areas that are about 150 to 250,000 regionally. We're focused on the fact we've got the demographic shift, we've got the growth in the number of seniors annually, we've got a stable position in each of those marketplaces. They become very focus points for us to make sure that we're acquiring good quality, active and operating properties. And our focus is to acquire properties that are cash flowing right from day one. The reason being is that by acquiring properties that are active and cash flowing and stabilized, we then have the ability to pay our mortgages, which are our standard first mortgage, typically around high 50s to 60%, and also pay all our operating costs and salaries, and then have enough left over to pay our distributions for the preferred targeted distribution level that we've got for our investors in our fund. That being the case, we're far better off to acquire properties that are active and operating, stabilized, as I mentioned, as opposed to looking at redevelopment or new development properties. The reason being is that those may be very good opportunities in the future, but do not have the cash flow or don't have the stabilization to the cash flow that we would like to see at this point in time. So our focus with our plan is to double the size of the company this year and again next year and be ahead of the business plan. Our goal being at the first stage to hit that 3,000 beds and maybe as much as 5,000 based on this market. We also have the benefit of the minimal competition simply because in our tier 2 market, we have far less competition, most of which comes from offshore money as opposed to domestic. And the offshore money coming in doesn't succeed as well as we can because they don't have the licensing or the reputation that we have in this marketplace. And that's critical for us to be able to move forward at a strong pace when the vendors, those who want to retire, or the large corporates looking to rationalize their portfolios, look at us with that stable history, stable operating background, proven licensing, gives them a real comfort on the ability to sell to us versus unknowns from, in this case, offshore markets. As a result, we've been doing very, very well with lots of referrals of quality properties, an increase in the number of properties coming to the market simply because a lot of the older owners in their 70s are not wanting to continue on to redevelop and fight their way through the COVID difficulties and slowdowns and shutdowns that we've been going through on an ongoing basis. They also don't want to put the effort into doing redevelopment at a future date. As a result, we end up getting a lot of high quality properties for sale at a terrific time to negotiate the purchase. And then secondly, the large players who are focusing on new, very large A-level properties in that 200 plus, 300 plus bed size, and working to dispose of some of their portfolio in the smaller regional centers that might be 80 to 100 beds. Those fit us in an ideal manner so we can continue to grow professionally, profitably, and operate in a successful manner based on our strategic structure to our management team.
Well, Jim, it's really exciting to see how fast Levante Living is actually growing. Perhaps you can talk to our subscribers a little bit about the actual advantages of acquiring properties rather than going out and building an existing or building on an existing huge property or building a property from scratch all entirely on your own.
Great question, Chris. The answer is really simple. Our strategy has been from day one to acquire properties that are in strategic locations of the tier 2 market, but have a cash flow right from day one. And as a result of that, gives us an opportunity to build a strong net operating income right away. The other factor is that if we were to go into a process of being a developer at this time, we extend dramatically the amount of time it will take before we see those properties come to market, stabilize, and be a continuous cash flow. As it stands right now with a redevelopment property, it's probably going to take a good year to 2 years to get the cash flows up into a stabilized position to pay all the costs and see some return. And then secondly, if we were to go to a development side, and that's a greenfield with a new physical construction, we could be anywhere from 4 to 7 years before we really see a consistency to the property and its returns. And that being the case, we believe it's far better for us in a market timetable where we've got a lot of opportunity to acquire quality properties from retiring operators or big operators who wish to reconsolidate or replan the structure of their portfolios, focusing on larger A properties, gives us a terrific opportunity timetable to come to the market and be aggressive. That and the fact that we have a very successful equity raise program, and we've got a proven process for our debt structuring working with CMHC. So the combination of those factors together, and the fact that with the COVID deterrent or slowdown that is caused in the marketplace, is creating more opportunity of more vendors looking to sell their properties versus continuing or looking to redevelop. And as a result of that, giving us a stronger position to accelerate the portfolio, accelerate our cash flow, improve our NOI, and make a stronger fund for the returns for our individual investors on a much more quick basis than we originally anticipated. That being the case, we believe now that we could be a couple of years out growing at this doubling rate, that we'll be able to hit our tipping point and our major goal in the next couple of years versus the original plan, which would be another 5 years.
Well, Jim, as always, a lot of exciting updates, and we can't wait for the next one. I want to thank you again for so much for being here and bringing us up to speed with everything that's happening at Levante Living. Thanks again, Jim.
Thanks, Chris. Appreciate the opportunity to chat.